Welcome to Unfiltered Finance. I'm your host, Emily Turner, and joining us today is Geof Smith. We're talking about the dollar and the maybe unsavory position it's in right now. So, Geof, why don't you just quickly give us a lay of the land when it comes to the U.S. dollar?
Well, I mean, there's a lot of things that go into the dollar. I think one thing that people have been noticing lately, that a lot of the central banks around the world are actually kind of getting rid of the dollar and going into more stable assets like gold. And I think with that, but it's still the global currency. And I know that people think that, the dollar's been getting, killed over the, since we went off the gold standard. And it's down, down, down. I mean, anybody can grab a chart out of the market to justify what they want to say. I kind of disagree with that in a way. I mean, if you look at how the dollar's done against the Swiss franc, it's 25% of the value that it was when we came off the gold standard. But if you just look at the dollar index itself, the dollar index in 1970, which is the year before they came off the gold standard, was at 120. At the end of 1971, after we did that, it was at 111. Well, if you go back to just the end of 2022, we were almost at 115 on the dollar index. So we were above where we were back in 1971 on the dollar index. So I can say, well, no, we're not that far from where we were, 40 years ago, 50 years ago. But yet people can go, but look at this chart. And of course, if you look at just the Swiss franc, it looks like it's just been dying. So it all depends on how you want to look at it to say, yeah, it's not doing well, or yeah, it's still doing okay. I think what their biggest problem is right now, we have a horrible U.S. debt. And the problem is interest on the debt. And so you got to catch 22 right now because our interest rates are moving up, and everybody's seen that. And with that being the global currency, it's still the better currency to invest in. So it's held up very, very well. And I think that's kind of what's going on. And now you can't just sit there and say, well, the government can just, if they lower rates, Trump's been saying, hey, we're going to lower interest rates. Well, he wants to do that so they can finance debt at a lower price. The problem is their bonds that they've been selling are at a higher debt rate. And you have to pay that interest on those bonds. You can't just sit there and, get rid of that or redo it, because then you default on the bond. And the U.S. is not going to default on their bonds. So the only way to offset that is to print more money to pay off the bonds. And now what happens? Inflation, right? So we have inflation that keeps going up. And if inflation is going up, they're going to raise interest rates, and therefore the dollar is going to hold it. I mean, it's all over the place. And until they can figure out how to balance that out, which I don't know if they're going to be able to do that or not, we're going to see a fight on the dollar. Overall, it's weak. If you look at where it is right now, it's right here, right around 98.5 on the dollar index. Par value on it is at 100. That means at 100, that means it's equal with all the currencies that are in that basket. If it's above 100, the dollar's worth more. If it's below 100, the dollar's worth less. Right now, it can't get back above that par value. Even with the war that we've had, and the interest rates going up and everything like that, it won't get back above par, which tells you maybe it is weaker than it is stronger. And if it is, just think about this. If we actually leave Iran, then the dollar is going to probably really start selling off. So it'll be interesting to see, if we actually do leave Iran, what the dollar actually does.
Yeah. Well, one of the things, if we're looking in the past, right, was you called the gold super cycle in 2023 when pretty much nobody was talking about it.
Mm-mm.
What were you seeing in the dollar that made that call so obvious to you? And is some of that popping up now?
Well, and back then, the dollar was up there at that 111, 112 area, 109, really, really high. And I was just like, they can't sustain this. And I just could not believe that they could sustain it. And not only that, what you were seeing back then, and we're still seeing it today, where the central banks were starting to buy up tons of gold in place of getting rid of the dollar. And when I saw that I thought, well, okay, the dollar's up here where it was back in 1971. Is it really valued at that point? And I thought, well, no, it can't be, because we printed too many dollars and our debt's horrible. It ought to be going down, which tells me gold's going to take off and run, and silver's going to take off and run.
And it did, boy.
And it did, and it took off and ran. And I mean, people were laughing at me, because if you look what happened in January of 2024 and literally into February, gold tanked off. And everybody was like, see, told you. And I was just like, you just hold on. You just see what happens. And all of a sudden that thing turned around and off it went. And then everybody was just like, oh, you were right. So there it is.
That's a good feeling. Yeah.
Yeah.
So when it comes to what you're looking at, when it comes to the dollar, I mean, walk us through the DXY, the dollar index, or can we still call it the Dixie, by the way? I don't even know. And what it's kind of been telling you over the last 12 to 14 months, like, are there key levels that you're looking for here? And what are you watching?
Yes, actually, in the dollar index right this second, if we get back above 100.50, almost said 150, and I thought, ooh, I can't say that. But 100.50, if we get back above that, my guess are try to move the dollar index back up to the 104 area. Now, I don't think that's going to be very long-lived if they do that. I think it will do that just because we're going to be starting to raise interest rates. Interest rates are going to be moving up, and it might be because, the war, whatever it may be. But right now I'm watching that 100.50 area. And if you want to look at a chart, pull up a 15-week moving average, and that's exactly where it is. And actually it's a 15-week moving average. The downside, I'm watching 97.5. If we can get back below 97.5, I think they're going to start slowly leaking that thing back off. There's going to be a lot of support around the 92 to 93 area. If you go back to 2008, we were down at 71. So we've had a huge rally since the bank debacle, and we've had a huge rally out of that. Now they're probably going to start correcting that all back down as debts just get worse and worse. And they're going to be printing more money to pay off the debt, and it's just going to, you still have the same pizza, you're just dicing it up in smaller pieces. And so I think that's really what we're looking at over the past 14, 15 months. Really puts us back to, hey, we were up there right around 110, 111 on the dollar index. Now we've broken back below par, which is kind of a mental spot for a lot of the banks and the traders out there, saying, okay, well, now that we're back below par, does it continue to move down? And you can't really justify it dying off just because of the war, and it is still the global currency currently. There's a lot of conspiracy behind that one, that China's trying to take over the global currency, and blah 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 blah. That has not happened. Now, I don't think that's going to happen for a good long time, even if it does. But I think we ought to just take it very slowly, day to day, week to week, month to month, year to year, before anybody just jumps out there and says, the dollar's worthless and we should never have one ever again, kind of thing.
Those are strong words. But we're seeing strong language like that in headlines too. So how much of what the headlines say about the U.S. dollar is hype versus reality?
I am not one to believe media. It is hard to do that these days.
Accepting unfiltered finance, obviously.
That's correct. The problem is you have a lot of different economists out there spewing out all kinds of stuff. And the one thing that you have to do is be able to weed that out. And I'm not saying there's no lies versus reality. I'm not saying that. I'm saying you got to get the information, because people who are on TV and radio actually are trying to influence people in one way or the other, or convince people of one thing or another. What I like to do is go back to those old college days and go, okay, I had an economics class. What's economics like? And what's reality? And you sit there and think, well, we have global debt. We have U.S. debt. We have interest rates moving up. I mean, how does that affect the dollar? And that's what I always go back to, is saying, okay, how should this affect the dollar, or is it actually affecting it correctly? That's the biggest question, because you can go back to the normal way of doing things, and sometimes There's just a better way of doing things. I mean, you look at just the advancements in medicine, go back 40 years. I mean, it's changed a ton. The dollar's changed a lot also in that same 40, 50 years. I mean, we used to be on a gold standard. We're not anymore. We have had, I mean, go back to the 80s and 90s compared to what things cost now. I mean, go buy a taco at Taco Bell, right? I mean,
$2.80 for one. What?
yeah, exactly. And I mean, you used to be able to get them for 49 cents, and now they're $2.49. I mean, everything's that way. Go look at your grocery cart. Go back 10 years. How many groceries did you have in your cart compared to now? And that's inflation. And that's what it is. When you have inflation, you have to be able to stave off inflation somehow. So if your currency is moving up when inflation's moving up, then you offset that. But if it's not doing that, which it hasn't, it's been coming down as inflation's gone up. That means you're having to pay more of those dollars for whatever it is, whether it's a stapler or it's a loaf of bread or it's a pack of eggs. It doesn't matter. You're paying more for it. And so you have to find something to offset that. And that's basically, you're going back to the cost of living here. I mean, that's exactly what you're looking at. The only way people make money is to beat the rate of inflation. That's how you make money. That's the only way you make money, is to beat the rate of inflation. If you can't beat the rate of inflation, you lose money. So if you're looking at inflation that's at 4%, that means you have to make 4.5% every year to beat the rate of inflation. Otherwise, you lose money. And so people over literally the past 10, 15 years have not been able to do that. You can't go buy CDs. You can't buy bonds. Think about grandma, grandpa being retired. You always, dump your money into CDs and bonds because you could get 8 or 9% before. You can't do that now. And so what they did, instead of putting their money into those things, they thought, well, the only other thing that can pay you is what? The stock market. So they started dumping all of their money into the stock market. And so once they started dumping all the money in the stock market, what did the market do? It's been going up for the past 15 years, right? Barring COVID. That doesn't count. But it's been going up for the past 15 years. So they've made their money out of the market, though it's more risky. It's a lot more risky because stocks can die, stocks can go up. Look at what NVIDIA's done over the past 3 years, So there's a lot of things that you can make money on. The market's done very, very well. Now the question is, if interest rates go back up, bonds, CDs, you can get 6 and 7%. It's a whole lot safer to be in those than it is the market. You have less risk. So the question is, if we get interest rates back up there, what happens to the market? Does it start selling off because people are getting out of the market and going back into CDs and bonds? See the big dilemma here? I'm not saying the market's going to tank. Don't get me wrong here. But we do have to kind of keep an eye on interest rates and see what the public is going to do with that. I mean, we're seeing the S&P and the NASDAQ right now making all brand new all-time highs. And you think about that for a second. Is that justified? I mean, think about that. Is the economy just booming? Is the global economy just booming? Is everybody feeling all just lovey-dovey in the whole market, and everybody's just making money hand over fist, and the families are doing great? You think everybody feels that way? No, they don't. But the market's saying it is. So, see my point? So there's something that's got to give here. And I think, the dollar, is really, it's a bank thing. And the dollar is the central part of that. And you don't see the dollar enjoying the love. It's not above par. So my guess is the dollar's stagnant. It's whippy. It's stagnant, but it's not above 100.5. It's not below 97.5, but it's just chewing up in there and just going back and forth. But it's going to break one way or the other. And my guess is going to be to the downside, not the upside.
Why?
And if it goes up, well, it can't. They have to print more dollars to pay off the debt in the United States. They got to pay off that debt. They got to, and I don't know if we're the only country in the world, but we're one of them that can just print all the money they want. We can just print all the cash we want. And so they're going to print more money. Well, when you print more money goes in the system. When more money goes in the system, people have more dollars. Therefore, inflation is going to go higher, and you're going to have to do. It's a Ferris wheel that's just going to go round and round and round and round until something breaks. And when it breaks, then things are going to get bad. We're going to have
Easy.
very, very, very high inflation, or we're going to go deep, deep, deep into a recession or depression. You got to go one way or the other when it all
Wow.
goes.
So, what's your thought on the probability of that happening and the timeline of it?
Well, I mean, I don't run the central bank, and I don't run the treasury, and I don't run the government. So, I mean, in my honest opinion, they should have let all the banks fail back in 2010, 9, 8. They should have just let them die, but they didn't. They saved them. They put Band-Aids on them. They should have let them. It would have hurt real bad. Don't get me wrong. The U.S. economy would have been hurt real bad if that happened, but we would have come out a whole lot stronger. So there it is. I mean, and that's what you have to think about right now is, they can play with the numbers and kind of finagle things the best they can, but eventually, and this is the biggest problem. Let's talk a little bit, the smidge about politics. What president wants to have the worst inflation in the world?
Nobody.
None of them. And what president wants to have the worst recession, depression in the world? None of them. So they're going to do everything they can to say, I didn't do that. That's politics. But as far as what should be done, what Trump's trying to do, and if he's doing a great job or not, it doesn't really matter. He's trying to bring in a whole lot more money in these tariffs, bringing in tons of money. He's buying companies. I mean, they've made $18 billion off of Intel. I mean, he was touting that the other day. We've made $18 billion off Intel. Well, great. Now put that toward debt. I mean, that's what they ought to do. But he's trying to bring in a whole lot more money to offset debt. That's how he's run business. I mean, think about it. They go into huge debt. They bank a bunch of money. They pay off the debt and off they go. He's running it like a business. Make more money, pay off the debt, you're good. But not all presidents do that. So he's got 4 years to try to get that done. It's not going to get done, and there it is. So do we have nasty inflation? We could. I mean, I would say in the next probably 4 to 6 years, it's going to get real bad. Otherwise, they're going to fight it somehow, and we're going to be in stagflation. And stagflation doesn't do anything in the market. Stagflation just makes everything chew around, and everybody's got a brain cloud and can't do nothing. It's just, I mean, that's stagflation, and nobody likes the stagflation because nothing moves. We still pay a lot, yet we're not getting paid anymore, and the market's going to start chewing around. I mean, even the markets are still pretty volatile. I mean, you look at where we were a week or so ago in the S&P, we were tanking off, and all of a sudden we're back up making new all-time highs. I mean, it's just all over the place. And that's what they're trying to do also, is the market people are trying to figure out, hey, we're going to get better in the economy, or are we going to get worse in the economy?
Well, let me ask you this that's
yeah.
separate from that. So,
Okay.
But still kind of political, but geopolitical, right? So BRICS nations, Brazil, Russia, India, China, South Africa now, including somewhat Saudi Arabia and others, are building payment systems that are designed to bypass the dollar. Do you look at, most competitors commentators will talk about this as a geopolitical story, but it really affects price. So what do you think, how do you think this affects the market as they're bypassing the dollar?
Well, I mean, what's the best way to answer that? As a trader, I mean, I trade in the markets every day. I mean, I buy and sell, and I buy and sell, based off of, today, tomorrow, the next day, and everything like that. On a short-term basis and everything like that, I really don't give a hill of beans about that. How's that? The market is my employer. I must do what my employer tells me to do. If not, I get fired, right? So I either make money out of this market, or I lose all my money and I can't do anything. So I have to do what the market tells me to do. Now, is that because of what all the politics is doing? Not necessarily. Now, that does not mean that off the digital crack device here, that Trump doesn't tweet something out and all of a sudden the market tanks, right? That happens. But I think on a day-to-day basis, that doesn't mean just a whole lot. On a real big picture, on the other hand, does the dollar come off the global currency? Because that's what they're trying to do. If they're bypassing the dollar, that means they don't want to use it anymore. And if it's not being used anymore, then what gives the US dollar the right to be the global currency,
Yeah,
right?
I mean, and how seriously are institutions taking this?
Exactly. So the only way to offset that is to buy an asset that they can do it with. Now, do you do that via oil or do you do that via gold? That's what you've got. You've got things that actually mean something. Silver. I mean, you look at silver today. Silver's taken off big time today, and that's just because of manufacturing news that came out. So there's a big demand on those metals right now to say, hey, I'd rather have something parked that has actual true value, as opposed to something that is backed by the good faith of the U.S. government. And that's what the dollar is. And one thing that's really interesting, I bet you most people don't notice this. You look at the dollar, it says it's a Federal Reserve note. Have you noticed that? Pull out a dollar. It's not called any type of currency. It's not a U.S. dollar. It's not backed by anything. It's a Federal Reserve note. So we actually owe that money back to the Federal Reserve, not the U.S. Treasury. It doesn't say U.S. Treasury on it. It says Federal Reserve note, which is not the government. It's the Federal Reserve, because the Federal Reserve is not part of the government. It's a totally different entity. So it's a Federal Reserve note. So we're actually using money that the Federal Reserve gets, not the U.S. government. Isn't that cool? Yeah, but look at a $20 bill, a $1 bill, a $5 bill. They all say Federal Reserve notes on them, not a U.S. Treasury note. Big difference. Big difference. So kind of scary if you think about it.
Yeah. Well, you mentioned it already, and I know it's one of your favorite topics. So let's bring it back to gold, because obviously you call it the super cycle, and I want to make the connection between the U.S. dollar and gold, because the reality is, if people were feeling bullish about the U.S. dollar, gold likely would not have shot sky high as it has.
Right.
So what does that correlation tell you that's happening right now, and where do you think that leads?
There's fundamentally, now I'm not going day to day here and know whoever tweets what next, okay? But fundamentally, there is nothing to say that gold's not going to $7,500, period. Silver's going probably to 140. There's an underlying issue that most people don't realize, and I'm just going to bring this up so people can kind of look at it and go, oh, there's going to be a problem with silver, and it's not because it's the cheap man's metal, whatever you want to call it, cheap man's gold. It's because of solar panels. Solar panels use almost 1 ounce of silver in every one of those solar panels. It's 25 grams. There's 31 grams per ounce, okay? So use about 25 grams of silver per solar panel. They make money as long as silver stays below 140. If it's above 140, every solar panel that's out there, they will lose money on, period. So and think about it, everybody's doing solar panels now. Everybody's making solar panels, selling solar panels. Man, you can get generators that are solar powered, right? So if it gets to 140, you're going to hurt a huge industry, solar, and they don't want that there. And look what happened. When we hit $120 on silver, they saw that, and in China, they started dumping silver. And the reason for it was it's going to hurt their industry. So you got to keep that in mind a little bit. There's some industrial politics that's going to affect that a little bit. So just keep that in mind. Outside of that, there's nothing to say that those things should not go up fundamentally. Global debt's getting worse. Our debt in the United States has gone from just in the past 3 or 4 years, from 23 trillion up to 31 trillion. Think about how much $1 trillion is. That's a lot of money. That's a whole lot of money. And so our debt is just ballooning up, and our dollar is getting worth less. I'm not saying worthless. I'm saying it's getting devalued. So that being the case, that's why the dollar is having a hard time going up right now. Even though interest rates have gone up, the dollar's going, yeah, I should be rallying, but it's hard to do that when they're printing more of me and devaluing me some more.
Do you
So,
trade the dollar?
I used to trade it all the time. It's on the ICE, the Intercontinental Exchange. The ICE owns the New York Stock Exchange and it owns the London International Financial Futures Exchange. Okay. So the problem is the ICE is stupid. And I say that and I'll explain that. So if I get data and trade through the CME, I can get data of all the futures contracts from the Chicago Mercantile Exchange, the NIBOT, I mean, not NIBOT, but the COMEX, all that stuff doesn't cost me $5 a month for it. I mean, it's dirt cheap. All I got to do is make one trade and I pay it off. The Intercontinental Exchange, for whatever reason, keeps raising their exchange rates. If you want to, and they don't have very much there. You have, it's all the softs, coffee, cocoa, cotton, all of that. Okay. Sugar. The dollar index, they have those at the ICE. They want a minimum of 120, actually I think it's $135 a month just to get a quote on that. So all the brokerages dropped them for the most part. Now, in a couple of them, you can pay the brokerage that exchange fee and get the feed from the ICE. And then you can trade it. Well, because of that, it's really killed the volume on the ICE exchange. Nobody trades that unless you're, Folgers for trading coffee or your Hershey for trading chocolate or whatever it is. It's just too expensive and it's not worth it. So do I still watch it? Absolutely. I watch it every day. You can watch it every day. Go to investing.com, go to the economic calendar, and it's right there on the front screen, the dollar index. And you can watch it.
Really quickly, because my battery's dying and my charger is what are the key takeaways, like for people who are looking at the dollar, whether they want to trade it, like top 3 actionable items, or they're concerned about it, that kind of thing. I mean, what are the key takeaways here for like the retailer?
Well, instead of going to the dollar index, why don't you go the other direction, do something based off the dollar? Why not buy FXE or buy FXF, which is the Swiss franc. The Swiss franc is your strongest currency against the dollar. So why not buy FXF? It's an ETF, and it controls the dollar versus the Swiss franc. So you actually have Swiss francs, quote unquote, in this ETF to offset your loss against the dollar. So I would use the euro, the FXE, and if you want to, the FXC for the Canadian dollar, and you can use FXF for the Swiss franc, and you can put your US dollars into that and have those currencies pay you to offset your devaluation of the dollar. So instead of just trying to do something with the dollar, why not, if you want to make money off of currency, go into the FXEs and the FXCs and the FXFs and offset that. And that way your dollars are actually paying you. Now, you can also go to your local bank and your money's in your account. You can convert that into Swiss francs. You can convert that into euros, and you can hold those in your bank account. You can go to the bank and say, hey, I want $1,000 in Swiss francs, please, just in my account. And they will do that for you. Now, it will take them a day to do it because they wait for the close and they see what the settle price is. And then the next day you have that. Isn't that cool?
It's like currency trading in your savings account.
Absolutely. You can go into a lot of banks and they'll even have a board up there saying, here's the exchange rate. Just people don't pay attention to that when they go into their bank. And people don't go into the bank. They go through the drive-through or they go to the ATM. They never go into the bank. So go in there and you can tell them, hey, this is what I want done.
Well, and one big one you're leaving out though, and that is gold. And I know I'll put a link to your newsletter in there because I know
gold. You can buy gold. The thing is, gold's expensive. You go buy an ounce of gold and it's real expensive. Now you can buy GLD. There's nothing wrong with buying GLD. And one thing that's really cool is you don't have to buy 100 shares or 1,000 shares or whatever it is. You can buy a share. You can buy 2 shares. You can buy 5 shares. They even have what they call, what are they, fraction. You can actually buy fractions of stocks and stuff like that in gold. I would definitely have GLD and SLV in my portfolio. I think they're going to continue to go up, and they've gotten pulled back a little bit. Buy them now. I mean, they're looking good. I mean, but I would definitely have GLD and SLV in my portfolio for sure. And if you want to go over to the pawn shop and buy some gold coins and silver coins, go for it. No, there's nothing wrong with that. Go over there and get them.
Everybody wants to be a pirate just a little bit, you know?
Exactly. And there's nothing wrong with having gold and silver coins. You can now be careful. I mean, you can buy the not sterling silver, the actual silver, the 0.999 silver coins. But then they have sterling silver, which is only 90%. Then they have what they call junk silver, which is like the old quarters and the nickels and the dimes and stuff like that. It used to be silver before 1965. You can buy those, but they'll have anywhere between 60 to 80% silver in them. So they're not, that's why they call them junk silver, because they're not pure silver. So you can buy those also. You can get all those that you want to, but I would have some for sure. I mean, silver's got a low melting point. If you want to just, melt them in a big old pot and skin off all the copper and nasty stuff on it and just make little silver ingots, you can do that. It is cool. But I would definitely have that.
When it comes to the hard nose, like based on what we've seen with the dollar, what would you tell retail traders and investors, like, just don't do or stay away from?
I have a real hard time buying. I mean, if you just want to look at the stock market itself, I have a hard time just jumping out and buying like Nvidia and Apple. Their valuations are way too high. I mean, I think you have way too much risk in those things. If you're a trader, fine. If you're an investor, no. I mean, you might be able to have a nice little ride for a couple of months, and then they're going to get hammered. I mean, it all depends on what the global economy does and what it is. These people are riding the AI tidal wave right now. I mean, they're on a surfboard and they got themselves a nice wave and they are just cruising on that thing and hitting the pipe. And I mean, it's a nice ride, but how long can that sustain itself? I mean, really, you're going to go from AI into quantum computing before long. Now, I don't know how long that's going to take, and I'm not a nuclear physicist by any means. Yeah, but they're going to eventually get into quantum computing once they get past AI. And the question is, do they do that? So, I mean, and as far as that's concerned, then I would kind of be really kind of leery of some of those really big stocks. However, on the other side of that, I would look at infrastructure stocks for sure, because they've got to build all this out. So I think shipping, trucking, SEA and all those trucking companies, the XOP and all that stuff, or XPO, I guess it is. XPO, all those trucking companies ought to do pretty well. I think infrastructure-wise, it's a pretty good investment on a longer-term basis. Gold, I think, is going to go to 7,500 on probably over the next year and a half, 2 years. I can't see where it can't. Right now, we got war going on. They're going to be, our debt's going to get worse. People are going to start realizing that before long. And you have to remember this also. We've had over the past 2 years, if you just look at the end of last year, gold was up, 25% last year. It was up over 100% in just a year and a half. And everybody's like, man, they're killing gold right now. They ain't killing gold right now. They're just pulling it back some. We have a high up there at 5,600 in gold, and we're down here at 4,600. Yeah, it's down $1,000, but it needed it. It really needed a correction. It went up too far, too fast. And I think it's gotten to where it's built in a nice little base. I think this is a great place to start, buying up GLD and SLV and gold coins and silver coins and whatever you want to do with that. And I think on the long term, it's going to continue to move higher and higher. Don't throw them in the trash can. They've been around for millennia. Why not keep some and use it? Even Florida, your state, even Florida takes gold and silver as currency. You all passed that. and you can use gold and silver as currency in your state. You can go to Walmart and apparently use it. I'm like, that's kind of cool. So, but
Can you
you're
imagine
not going to get,
that would be quite the hoopla. But you know what? I guess it makes us apocalypse proof, maybe.
yeah, yeah, pretty much,
Yeah.
pretty much.
So,
So I don't, I,
quick takeaway for just kind of to encapsulate this conversation, right? Like, what is your quick take on the state of the dollar and its
the
future?
state of the dollar right now is, I'll say it's a little iffy at this point, just because it keeps going up and back, and it's stuck in a range. It's a sideways range. Does it break back above the 100.50, or does it go back below 97.5? I'm on the, it's going to bust 97.5, and it's going to go down, and gold's going to take off and run. That is my takeaway on the U.S. dollar. It cannot sustain where it is right now, and it hasn't. I thought with the war and the interest rates and everything like that, dollar's going to take off. It didn't. It didn't take off. Gold came back, but the dollar didn't take off. Now it is like, ooh, they can't make it go up. Which, something that can't go up must do what? Come down. Exactly. So if it can't go up on all of this, then it's weaker than it is stronger. Therefore, the dollar is probably going to continue to move lower. And therefore, you'll see gold, silver, and all that move higher. There it is.
Well, I appreciate your take and I appreciate your time, Jeff. As
Yeah,
always, you're an
no
excellent
problem.
guest.
Thank you.
And I'll make sure that everybody's got your information in the description
Awesome.
below. And in the
I
meantime,
appreciate
if
it.
you are watching, leave a comment. Let us know your thoughts on the dollar, your thoughts on gold, and etc. We would love to hear them. And click like and subscribe. Jeff, thanks so much.
Thank you.